Hey everyone, we like to get together and talk about real estate investing because what else would you talk about on the Real Estate Investment Network besides that? I had a young gentleman come into my office not too long ago and kind of sit down. He had made a phone call inquiring about wanting to buy one of my properties and sounded like a pretty educated young man. I said, well, why don't you come in and let's have a cup of coffee or something? We sat down a little bit and visited. And one thing kind of came up that I thought was real interesting. I thought we'd talk about today, kind of peel the onion back on, is location. Value of location in real estate. And I get asked all the time, well, how do you know where to buy? How do you know what to buy? How do you know, right? They ask all these questions. And so that was one thing that kind of came up because there are pros and cons to those things. And I want to talk a little bit about that today, just for the next few minutes. So let's talk about it. There's an old expression in real estate that location, location, location. And that's super important when you're buying your house to live, but how does that really relate to an investment? Because that can be different. One of the things that we want to do when we are going into an investment is to think about how we're going to come out of the investment. It's kind of what he and I talked about the other day. Was there are certain areas of town where you can get real estate a lot cheaper, right? And sometimes, especially when we're talking about rental income and purchase price, there's some certain ratios that we'd really like to stay into to make the math just work real easily. But can you get those ratios in premium parts of town? Maybe, maybe not, right? So sometimes you might go into a less desirable, more affordable place of town to buy a piece of property because the rental rates versus the purchase price are a lot better ratio. Well, why is that? Makes you think, doesn't it? How come someone would pay a higher rent per square foot maybe in a certain area based on the purchase price per square foot, right? Kind of ratios. Makes you think, doesn't it? So one thing I always consider is that the reason why that property might be cheaper might not really be a good deal. Because are we looking for location? Or are we looking for a good deal? A lot of guys come up to me and they go,
Greg, I just got a great deal on a piece of real estate.
I'm like, really? That's fantastic. Tell me what you just bought. And it's something I would never touch in my life, okay? So the good deal sometimes always isn't a good deal. You have to look at all the different components. And of course, your exit strategy should be one of the first things at the top of your mind. When I buy this property, how am I going to get out of it, right? And if the property is going so cheap, there might be a reason, right? So you have to kind of think things through in that regard. So sometimes it might be better to spend $100,000 on a house as opposed to spending $35,000 on a house. It might just be better because trying to resell that might be a little easier, right? Nobody might want to be in the neighborhood where you can pick up a $35,000 house. Your rents might be stronger. You might be able to get a better cash flow return on the lower end property, right? You might be able to rent a $35,000 house for $600 and a $1,000 house for $1,100. So the ratios, right? You're working those ratios. So the cash flow might be a lot better. However, think about a few things like what's the quality of the tenant that want to live there, right? Do you really want your spouse on Friday night at 9 o'clock at night to have to go tend to a problem there? Is that the place you want to be? Or is the next investor going to see that same kind of ratio, right, and get excited about that same kind of ratio? Are they going to want to lend more to the premium parts of town? I don't know. There's on the flip side, you have to be real careful too, because you can get upside down real easily, right? That same $100,000 house in one part of town might be $150,000 in a different part of town. And now you can still only get $1,200 in rent instead of $1,100 in a different part, right? Now you've way overpaid for the property. You're not getting a good ratio of that rent price versus the purchase price on the property. That would be a better place where you might want to buy to live, not buy to rent, right? Because there are certain pockets of town where you can see owner occupancy is a lot higher versus rental occupancy. And so generally it's because you're having to pay a premium for those properties and it's keeping the investors out, right? So not that you always want to follow the flock and run where all the other sheep run, but you kind of need to look at that and go, okay, well, is my investment bang for my buck really getting a good return over there? This was a struggle I had a lot of times with different investors, and they're like, no, I just want to buy in my same neighborhood. I'm like, not so sure, right? Got to be careful about that. First of all, do you want to live with your tenants? I'm not so sure. Secondly, right next door. And then secondly, I'm not sure that those houses that you're going to buy in that neighborhood are going to be really going to be set up to give you a good return downstream for the same dollar invested. So it really is a balance, right? Now, a lot of higher end apartment builders, that kind of thing, they'll really press on some of the better tracts of land, and they'll really push those limits into what they'll pay for that land. But they're also going to charge a real premium for that rental rate too. They're also going to offer up all kinds of amenities. So when you start to compete against really Class A plus kind of apartment communities and rentals and those kind of things, then you're also going to have to offer those same kind of amenities, because the person living in that location and paying that kind of rent are going to expect those amenities. So, and every investor has to cross this threshold. Every investor has to make these decisions in their own mind. Who are their target audiences? Who's their customer from a tenant perspective? And once they kind of decide who their customer is, they have to figure out kind of where that customer lives. Where's that customer comfortable living? And so, my customer is a good working class community. That's where I want to be. Workforce kind of level housing. That's where I like to be. I like to tell people that we like to provide a nice, safe, clean place for people to live. We are not into providing swimming pools and movie stars. Okay, that's for the top of the line, Class A amenities, those kind of things. That's not what we do. But we're also not in that lower end, the house is falling down all around them, slumlord kind of deal. That's not what we do either, right? We think that people need a nice, safe, clean place to live, and that's what we try to provide. So we've picked our target customer, right? That's that target customer, and then we go out and find those communities that meet for the cost and the rent rates and offer those kind of level of services. Maybe it's those people might need to be near a bus line or near shopping and things like that, because transportation might be an issue for them from a cost perspective. So we try to target those neighborhoods too, because that's our community, that's our customer base. So from a location perspective, those are all things to consider, right? Because later as you start to market your property after you've acquired it, maybe you fixed it up, done whatever you're going to do, and you're going to market that property for a future tenant, those are all the things that they think about. Access to childcare, access to transportation and shopping and healthcare, things like that. Those are all important things that people tend to consider when they're looking for a place to rent, because that is your customer. So you need to consider that. So when we look at location and we look at good deal versus location, I mean, heck, you could have a property that's absolutely falling down in a great part of town, near shopping, near medical services, near transportation, all that. That might truly be a good deal, right? As opposed to location, right? When combined and compared with that. However, the structure itself, the layout of the building, all that could still be drive. It still might be sitting on an oil tank that you gotta remediate, right? So that might be causing the good deal. But all things to consider. So then later we'll get into some episodes where we'll talk about how to analyze these properties, how to break it out, what ratios to use, things to consider. But all that has to go into a big bucket, right? Stir it all up like a chocolate chip cookie, and then hopefully out comes out of the cookie dough either something good to eat, right? So, but all that has to go into your consideration bucket when you're analyzing it, right? So good deal or good location. When there's a conflict, my advice to you is to go for the location. Hopefully it'll be a good deal in a good location. But maybe not. Maybe it's worth paying the premium, right, to get a location, because maybe you have a long-term game plan, right? If you hold some land for 20 years, one of my mentors and I used to joke all the time. He was a little older, and he would always say, man, I wish back in 1985 I'd bought that piece of property. And then this was in the early 2000, and we would joke and say, man, I wish in the early 2000 I'd bought that property, because in 2020 I'd be wishing I had. And that's really the case, right? If you might, for a good location, you might buy and pay a slight premium for that location, because 20 years from now, 20 years from now, it would have a stronger appreciation, and it would look cheap. Your purchase price that you paid for it then will look really cheap for what you would pay for today. And I can tell you that from experience for properties that I bought years and years ago. Right now I look at it and go, man, I would never pay that much for a piece of property as people are making me offers to buy my land. And, but certainly I would, if I had to do it all over again, I'd just buy more. So good deal, good location, things to consider here on a good old Monday afternoon at the Rocket Guy. So thanks for tuning in. I hope this was real helpful. Get you thinking about location versus good deal. Don't just jump on it because it's a good deal, right? There's a lot more to it. And we're going to peel back that onion in future episodes. And so tune in and really bring out your pencil and piece of paper, and we'll even do some math eventually, because I am a rocket scientist. I love to do some math. Hope you enjoyed that last video. If you did, like and subscribe. If you didn't, well, forget about it. Move on to the next page. But check out some of our other content at edu.branchwealthpartners.com and get educated.